Have you ever wondered why the US dollar seems to be everywhere in global finance? From oil prices to international trade, the greenback is the king of currencies. But what happens when this financial monarch flexes its muscles or shows signs of weakness? The ripple effects can be felt in investment portfolios around the world. Welcome to the Savvy Finance Corner YouTube channel. Wealth begins with knowledge. The US dollar's reign as the world's reserve currency is no accident. It's trusted, stable, and backed by the largest economy in the world. Central banks and governments hold it in their reserves, making it the go-to currency for international transactions. This dominance means that when the dollar moves, the whole world feels it. In global trade and finance, the dollar's importance can't be overstated. Most commodities like oil and gold are priced in dollars. This means that even small fluctuations in the USD can directly affect global pricing and trade flows. The dollar also serves as the benchmark for cross-border investments and foreign exchange stability, acting as a financial compass for the world economy. But what happens when the dollar is strong? For us investors looking abroad, it's a double-edged sword. A stronger dollar makes foreign assets cheaper in local terms, but it can also reduce returns once profits are converted back to dollars. Imagine investing in European stocks, only to see your gains evaporate when the euro weakens against the dollar. Emerging markets feel the heat when the dollar flexes its muscles. Many of these countries borrow in USD, and when it strengthens, repaying those debts becomes more expensive. This can increase financial stress and sometimes trigger a mass exodus of capital, leaving these economies vulnerable. Commodity prices also dance to the dollar's tune. Since most are priced in USD, a strong dollar typically pushes commodity prices down. This happens because it becomes more expensive for other countries to purchase them. It's potentially leading to reduced demand and lower prices. For multinational companies, strong dollar presents both opportunities and risks. U.S. companies that export abroad may struggle as their products become more expensive in foreign markets. However, those importing raw materials might find themselves with cheaper costs, potentially boosting their bottom line. But what about when the dollar weakens? U.S. exporters often find themselves with a spring in their step. A weaker dollar makes American goods and services more competitive globally, helping U.S. exporters increase sales abroad. It's like a sale on all things American for the rest of the world. Investors holding international assets also have reason to smile when the dollar weakens. When profits from foreign investments are brought back into dollars, they're worth more. It's like getting a bonus on top of your investment returns. Emerging markets often see capital inflows when the dollar is weak. Investors chase higher returns in these markets, boosting their currencies and stock markets. It's a financial tide that can lift many boats in the developing world. However, a weak dollar isn't without its concerns. In the U.S., it can lead to higher import prices, potentially stoking inflation. Meanwhile, foreign countries might experience the opposite effect. Cheaper exports to the U.S., but potential inflation due to stronger local currencies. It's a complex economic seesaw that affects different countries in different ways. Looking back at history provides some valuable lessons. In the early 1980s, U.S. interest rates were sky high, attracting global capital and strengthening the dollar. While this might have seemed positive for the U.S., it caused major stress in Latin America, contributing to a debt crisis that would take years to resolve. Fast forward to the post-2008 era, and we see a different picture. After the financial crisis, the Federal Reserve's low interest rates and quantitative easing weakened the dollar. This boosted commodities like gold and fueled growth in emerging markets, reshaping the global investment landscape. More recently, from 2020 to 2023, we've seen significant fluctuations in the dollar's strength. During the pandemic and subsequent interest rate hikes, the dollar surged as a safe haven. This put pressure on emerging markets and hurt multinational earnings. While investors turned to the dollar for stability in uncertain times, so how can investors navigate these dollar-driven waves? One strategy is hedging currency risk. Investors can use financial instruments like futures, options, or ETFs to reduce exposure to currency volatility. It's like having an insurance policy for your international investments. Diversification across markets is another key strategy. By spreading investments across different regions, investors can reduce their reliance on the dollar's performance and provide balance to their portfolios. It's the financial equivalent of not putting all your eggs in one basket. Investors also need to consider the balance between safe haven assets and growth markets. Depending on USD's strength, they might prefer safe haven assets like US Treasuries when the dollar is strong, or riskier assets in emerging markets when it weakens. It's a constant dance of risk and reward. As we wrap up our journey through the world of dollar dynamics, there are some key takeaways for global investors. The dollar's movements can reshape returns, risks, and opportunities worldwide. Understanding its role is crucial for effective global investing. It's not just about picking the right stocks or bonds. It's about understanding the currency context in which those investments exist. Monitoring USD trends is essential because the dollar drives global trade, commodities, and capital flows. Keeping track of USD's strength or weakness helps investors anticipate risks and adjust strategies proactively. It's like having a financial weather forecast that can help you prepare for whatever economic climate is coming. In the end, the US dollar's impact on global investments is a reminder of how interconnected our financial world has become. Whether it's strong or weak, the greenback's influence stretches far beyond America's borders, shaping opportunities and challenges for investors around the globe. By staying informed and adaptable, savvy investors can navigate these currency currents and potentially turn dollar dynamics to their advantage. Remember, in the world of global finance, knowledge isn't just power, it's profit. Keep watching, keep learning, and keep growing your wealth. Until next time, this is Savvy Finance Corner, where we turn financial wisdom into wealth.